I'm Ellis Martin. Join me now for a conversation at the Sprott Resource Symposium in Vancouver, British Columbia, for a conversation with Trey Wasser, the president and CEO of Ellis Gold Royalties, trading as ELY on the TSX Venture Exchange and ELYGF in the U.S. on the OTC. Ellis Gold Royalties is a North American emerging royalty company with producing and development assets focused in Nevada and the western U.S. Its current portfolio includes a number of deeded royalties and option properties, which are currently generating revenue. All portfolio properties are sold or optioned on a 100% basis, while the company retains royalty interest. Its option properties will produce royalties if exercised. Ellis Gold's royalty portfolio includes producing royalties, fully permitted mines, mines under construction, and development projects that are being permitted for mine construction. The company is well positioned with its current portfolio of over 20 available properties to generate additional operating revenue through option and sale transactions, with a proven track record of maximizing the value of its properties through claim consolidation and advancement using its extensive proprietary database. Trey, welcome to the program. It's nice to have you at the Sprott Symposium.
Always great to be here. Love Vancouver this time of year.
Tell us all about Ellis Gold.
Ellis Gold is an emerging junior royalty company. We've been putting together a portfolio of royalty properties, primarily in Nevada. We've been working on it for the last 2.5, 3 years. We currently have 33 deeded royalties. We generate royalties by selling properties. We have 20 properties that are in the sale process. Those are generally under a 4-year option. The option is exercised will also generate royalty. By now, we're using the cash flow from that portfolio to buy existing royalties, and we've been able to buy royalties on some very good projects. The Fenelon project of Wallbridge Mining in Quebec, on the Jarrett Canyon mine that's operated in Elko County, Nevada, and we're continuing to grow the portfolio every day.
As a royalty company, you more or less are project generator, but you're keeping a piece of all the projects. Am I right?
That is correct. And the piece we keep is the royalty. We do sell 100% of the project.
Now, why specifically Nevada?
Nevada has just been deemed the #1 mining jurisdiction in the world by the Fraser Institute. It's accessible almost year-round, most of there. There's very little, if any, helicopter exploration in Nevada. And if Nevada were a country, it'd be the 4th largest gold producing country in the world. That's how much gold still comes out of Nevada.
I didn't know that statistic, but it's certainly very, very believable, and it's a very business-friendly, mining-friendly state, and why be anywhere else?
Well, that's true. And for our business model, Nevada is still open for staking. Many of the properties that we sell, we do not purchase, we stake. So we have very little cost in the properties. We have 2 people at our company, Jerry Bachman, who runs our royalty subsidiary and our Reno office, and Bill Sheriff, who has been around for many years, much of that in Nevada. Between the 2 of them, that's about 70, 75 years of experience prospecting in Nevada. Between them, we have a huge database of all the properties, and they know everybody who owns the properties, and we've just got a real leg up on being able to identify and acquire properties in Nevada at little or no cost, just the staking costs.
Are you talking about the same Bill Sheriff with Golden Predator?
That is one and the same. Bill is now one of our 5 board members at Ellis Gold.
So he's very, very active with Ellis Gold.
Yes, he is. He has input on the properties, identifying. We purchased his portfolio of Nevada properties in 2017. It included some royalties and quite a few properties that had sit for quite a while and needed our attention.
The royalty business model is different from most mining companies in that, and I'm guessing, I don't know if this is entirely true with Ellis, that you're not spending that much money, if any, on exploration and development. You are working merely on acquiring, as you said, staking properties and uplifting other royalties that become yours. So the cost of doing business is a lot less, and very good in this sector, which has been down but is now turning around.
Well, that's absolutely right. We operate a portfolio of over 70 properties. 33 are royalties. 20 are in the process of being sold in our option portfolio. 20 properties approximately are available for sale and being developed where we're consolidating claims and the such. And we do all this with with only 2 full-time employees, myself, who does all the contract and negotiations, and Jerry, who does the property work. And when you talk about royalty companies, if you go to our website, you can look at our presentation. I've got some great slides in there, graphs that show the comparison of royalty companies to gold equities and gold ETFs. Much better risk reward with the gold royalties. Gold royalty companies have outperformed gold over the last 10 years, where the gold equity indexes, the GDX, GDXJ, have severely underperformed. And the top 2 gold royalty companies, Franco-Nevada and Wheaton Precious Metals, over the last 10 years have outperformed the S&P. So that's something not many people know, but that shows that a gold royalty company belongs in your portfolio, regardless of your position on gold. And with gold heating up these days, it certainly should be in your portfolio.
Let's talk about the management of the company. The management team will start with you. Of course, that's very important with regard to any company that's doing business, and I'm sure our listeners would like to know more about you.
Well, I spent the bulk of my business career on the investment banking side. Merrill Lynch, Kidder Peabody, Payne Weber, over about a 25-year span, doing mostly investment banking and municipal bond trading. I then spent about 5-6 years doing venture capital work, and then retired for a while and got into the gold mining business 2006, 2007. Rest of the management, Jerry Bachman, I'd mentioned, he's 35 years of experience in Nevada and the western United States, prospecting and staking properties. He built up a portfolio of royalties that was sold to Frontier. Those properties were held by Newmont and recently sold to Cisco Royalties. So he's done this before. And of course, Bill Sheriff has had a lot of experience in Nevada as well as other jurisdictions. Our corporate secretary and director that runs our Vancouver corporate office, Steve Kenwood, is also our qualified person, GO, that has a lot of experience here in BC, Eskay Creek, and a lot of time with BHP. Not a big team, but a lot of experience there, and we make a great team for making deals.
And let's talk about the share structure, your market capitalization. What does that look like?
Well, we're right just under 100 million shares, 98 million in change, about 125 million fully diluted. The stock's been appreciating quite a bit, so we had the advantage. When I came to the company in 2010, we had a project that we were developing at Mount Hamilton. We developed that with a partner and sold it in 2015 to Waterton Global. When we started the royalty business, we had a treasury of about $7 million, and that allowed us to start the property acquisition and royalty acquisition. The property sales, of course, have generate revenue for us, cover our overhead, and that portfolio is profitable. So we've really only done a couple of private placements here more recently to shore up the treasury and allow us to do some of the royalty purchases. The first of the year, we did a deal with Sprott Global, and Rick Rule took a 9.9% position in the company. And more recently in April, we did a private placement with Eric Sprott, and he took a 5.6% stake in the company. So we don't raise money a lot, but when the check's got Sprott on it, we tend to take it.
So what can we see from the company during the next 6 months to 12 months?
Well, we'll be doing more transactions and have great news flow, both on the option property sales side. We're working on a couple of new royalty acquisition transactions. We think we're at the hockey stick, as they say in Canada here, point in the curve for our shareholders, because traditionally royalty companies in their early years have a very high beta, and a lot of appreciation in a royalty company happens in the early years. So we're currently undervalued compared to our peers in the space, and people are starting to look up and take notice of Ely Gold Royalties. So we look for some stock appreciation in the near future.
Well, I wish you all the best of luck. Thank you so much for joining me today on the program. Trey Wasser, it's been a pleasure.
Thank you.
I've been speaking with Trey Wasser, the president and CEO of Ely Gold Royalties, trading as ELY on the TSX Venture Exchange and ELYGF in the U.S. on the OTC. Go to the company's website, elygoldinc.com. I'm Ellis Martin.